Hello guys, and glad to have you on board again today. Real quick express update, as I think we're navigating into some very dangerous territory nowadays, and I think we're really going to have to talk about it. So I've clearly identified a pattern that has been going on for the entire Trump era, basically. Let's call it the stupid dumb trade, or I mean, that's the way I do see things. So this is a stupid trend alteration in which normally we should have trend ended out there. This is where we should have ranged for a bit before, of course, reactivating the trend later on. Nothing stays in range forever, but exactly not what Trump wants, because he wants teasing stuff, whatever. So I would call that the teasing structure, terminating every possible trending things, okay? Then of course comes back to the reality with huge volatile burst, and as the market tends to be low liquid, of course we need some financial support. So this is where the Fed started its repo program and stuff like that. So more monetary support to actually support the dumb actual trades that preceded. So dumb prices rising, huge liquidity problems, and therefore financial support is necessary. Okay, that's the pattern. So financial support just basically stops the market from consolidating, but doesn't necessarily stop the falling off a cliff pattern. It's just like, for emotional purposes, this definitely triggers some huge bearish biases in the market that are actually some kinds of logical, because when you see these types of things, you definitely get to sell the next market top, and you basically sell the resistant context. But this is where the second part of the pattern shows up, in which monetary support gets even more accommodative, and there is a motive set it as well by the Trump administration, basically trying to sell whatever they can sell. So this is just another teasing pattern that starts out there and manage the prices up to historical highs. In here as well, the goal is just to set a foot on top of the previous resistances and just try to last it as long as possible until, of course, the next time shits hit the fan, another external factor just fucks it all up beautifully, creates a lot of volatility, creates liquidity issues, and of course we need financial support once again. So the pattern just forces us to use more and more financial support because of more and more financial instability. But once again, there is just one step to say that the financial instability is created by the bullshit that is introduced in the market previously. So anyway, financial support, squeezing all the bearish reactivation signals in here, okay? And then, of course, as we fuck the bears flat, then there is no other choice but to create some stupid, low volatile patterns, because we basically flushed all the bears out the market, which is really dangerous once again. But in there, just a little teasing and a big lie from the president is more than enough for the market to rise from nothing. Simply because there is no bears in the market, it's easy to rise a little once in a while, day by day, tiny 0.5% one after another. Very, very painful for bears, of course. But that's the thing. We rise out of bears' weaknesses and absolute bullshit teasing. But then, of course, volatility shows up. Okay, some people will say you couldn't have predicted the coronavirus. Well, I actually did. Not the coronavirus itself, but I predicted that we would have a huge volatility problem down the corner. We did. And what did we do? Once again, financial stimulus. Oh great, we even managed to get some fiscal stimulus and some budget deficits, enormous historical deficits out of these ones, okay? And I would say that the extension of this bearish coronavirus trade is caused by the stupidity we've seen up there, okay? There are definitely some cause-consequence stuff out there, okay? Just like this wasn't necessary, though this wasn't either, okay? We could have just had something less volatile. So this is really all about that. Trump has been extending volatility in a way that made every intermediate time frames, specifically H1, H4 time frames, totally squeezed out, which means there's no swing trade anymore, because we just need to extend volatility, either pay for the bullshit or creating another bullshit market territory, just selling stuff, whatever. This is just really rhetorical. I mean, this is more about sending a message rather than actual trading, and this guy really took over control in the market, which is freaking dangerous. But anyway, So the pattern played once again in here, totally squeezing the bears, pushing historical highs. And the question we might be wondering right now is, are we dealing with the same thing as we had last year, in which we're just going to go flat, exhaust the bears, and to actually reactivate bullish later on? And in that perspective, whoever is waiting for a pullback is simply not going to get it. Okay, so that's the question I'm wondering at that point. But let me be clear, the answer to this question is I have my patterns and I'll follow them, because these patterns I've built, I haven't been building them from 5 to 10 occurrences. I've built them out of thousands of occurrences that I've seen trading the market on a day-to-day basis. This pattern we just talked about is a 4-time stuff, okay? It happened 4 times, so Jesus, am I going to compare something I've worked around for years and in which I've been building several numbers of occurrences versus something I've just noted for 4 times? So yeah, it can very well happen a 5th time, but does that mean I'm going to change everything for just this? No, definitely not. I'm definitely going to trade, just like I have absolutely no problem with the trading activities I've made over the latest 2 years. The only thing I regret is that I should have been less aggressive. So that's exactly what I'm going to be doing today. I'm going to be less aggressive in the perspective that, you know, today I am net bearish on the market. And today I just decided that I will flush this one out. I will get out of the net bearish exposition, still being 100% covered out of the bullish trades. And what's good about it is that recently, over the latest few weeks, I gathered some more bullish entries on some assets. So I've slightly increased my bullish exposition, which means I don't have to cut off that much of the bearish exposition I had, but still have to cut some. That doesn't mean I'm not going to put it back in immediately if that's necessary. It's just that I don't want to let myself ride into the low volatility stuff. Because what I see right here, right now, is volatility short trades, real dangerous actions on the VIX. And until they get invalidated, I don't want to be the stupid guy who just basically says, okay, tomorrow, another day, I'm going to wait till tomorrow, until tomorrow, until tomorrow, as they grind their way up 0.5% a day, because that's exactly the mistake I've made last year, okay? So I'm just going to cut it off so that even if they manage to succeed into the low volatility trade that pushes up right to new historical highs, the only thing I'll do is just stop the cover trades one by one at their break-even entry point and take no losses. I don't want to introduce the possibility for any loss on these trades, okay? So cut it all off, as I am nearly at my average prices for the reinforcements. So the net bearish exposition is the things I've been taking on these areas. So I've decided to take down these trades until further notice. Until I've got a clear and clean H4 signal validated, I don't want to be net bearish anymore. Okay? Covered? Yes, I'm definitely 100% covered for the bullish trades I have, but I don't want any bearish net exposition anymore because the market simply doesn't want to. Okay? So I'm going to wait for structures. Technically speaking, for those who are intermediate or beginners, you should have figured out that as we step into the 4-hour context, there is not enough information suggesting that we might have a bearish range in here, because the bearish trending range would be requiring to hold candle closes below the context, which is not the case. Okay, we're closing the context inside the context every time. Closes in here, closes in here. Okay, so we failed to close below. We've bought the trend moving averages, so this is definitely not enough for bearishness. For bearish trending range, we need to break a support. We failed to do this. We need to slip below moving averages. We failed to do it. We need to hold candle closes below the context. We failed to do it. So this is at best a neutral range. Okay, so neutral ranges can only be traded above the context and at 76% minimum required retracement. So this is the area in which beginners can start selling again. Until then, and until we manage our way up there, you do nothing. Please don't. Okay, so wait for confirmed signal into your speculative areas before trading. Otherwise, you're going to be down some troubles. Okay, we're in the 4-hour context, which means this is where you need to trade. All right, but because there's always a but, okay, I don't nearly think that we're going to go right up there. That's my personal sentiment, but that doesn't mean I'm going to be actively fighting against the market that doesn't provide sufficient volatility, okay? Because the risk in here is that we would be just dealing with the same replicate of this stupid bullshit in which we stood into overbought territory for quite some time. And if you try to sell out there, then I wish you are good enough to navigate into such a low volatility without taking such a bear trade. Okay, so until then, I think there is a possibility for this. Okay, I think we could bear reactivate anytime soon, but just the bear activity we've had previously with the experienced traders, the plan was simple. We were gathering trades anytime the market tried to dip a toe on top of the resistant context. And it has worked out pretty well. But the thing is that I don't know if today is going to be one another of these days in which we succeed out there. Because the volatility is so low that we could just be in the middle of a big fucking trap. Okay? So I'm totally ready to put the money back in the market at any given time. I'm just waiting for a reliable enough signal that the volatility is not into this pattern of, oh man, I'm gonna fuck you and sell some volatility until further notice, okay? So be aware of this. It's going to be tricky because we're going to have to navigate against the trend into a very low volatile market, which means there's not sufficient enough spreads of bulls and bears movements to actually secure the positions, which means we need to enter blindly, very surgically precise, and we need to make sure that we take no losses. And I think in there, it requires a level of knowledge that just a very few of you guys only actually master now. So I'm going to deal with this behind closed doors with a few picked up experienced traders, and we're gonna let you know if we find something. But until we do, please guys, I wish you will be smart enough to stay the fuck away. If we find something suitable enough for trade, we'll let you know as soon as possible. But until then, just be patient enough and figure out that this is the only area in which you can trade with your strategy rules. So don't try to bend the rules unless you have the clear, necessary, advanced knowledge to do so. I don't think we're going to go up there, but I don't know for sure. So until then, this is your plan. Until I tell you to do otherwise. So please trust me for a little while. I don't do this to hide things from you. It's just like the things you might be teaching, you might be taught into this context are just far too advanced for many, many of you guys. Okay? So that being said, just take a little break. Okay? If we get out there, it's going to be next week. So just do something else. I don't know, go forex, but the forex isn't easy right now. There's not enough volatility into crypto. So yeah, I'm sorry to say it, but the market isn't that exciting right now. But get into stocks, okay? Individual stocks. So just forget about the top 10. This top 10 is definitely stupid as well. So avoid the mega caps. Go mid caps. Go big caps, but not the fancy ones. Okay, there are plenty of tradable opportunities, third range boundaries, lots of possible trades out there, things that you can handle. So spend your time valuably. This is where you can make money with a risk limitation. That's what we do in trading. We don't try to figure out the outcome. We don't try to be right or wrong. Okay, and right now into those motherfucking stock indices, I think that the probability to find out the right answer is just absolutely random, and it requires a lot of knowledge to actually risk limit into these conditions. Okay, so yeah, please, until further notice, just step aside or go into areas in which you can do stuff, and there are plenty of other stuff. Just open your eyes, open your mind, and stop fighting against this market, please. Bye guys.